Hello, hello, good morning. Welcome to another ES Futures Trading stream. Finally, the highly watched, expected non-farm payrolls has come out. As suspected, we have some volatility. We got what I was watching is I have especially I was paying attention to actually to the bond market here, to the bond markets. Because these bond markets were really, really weak. It looks really strong here, right? But when you take a closer look, this market was going from short covering to short covering to short covering, and some, you know, market getting long here and here as well, and all of this, at least just the past 2 days or 3 days, right? This one, the laggard section, has been removed, but it still remains. It still remains really bad. And I wonder what may happen here. Okay, being here, down here, this day, this day, this day, this is short cover. Short cover weakens the market. This is removing the laggard part of this movement. Uh, this is a closer look. This is daily, and this is the intraday. Still far from this range here. We have the same thing here as well. Now, it's a given now. Come on, man. That the Fed is going to cut. Everybody's expecting the Fed is going to cut rates in September. Everybody's assuming that. That's priced in the market now. Now, tremendous weakness. The Russell is the weakest index here, and this, I think this is a go no go level in the Dow, and the ES and Nasdaq making new highs. Yeah, taking. I think the markets this balance guidelines apply for these two markets here. You have this 10-day range here. Markets breaking out of this range, and balance guidelines apply here as well. Take a look on the intraday. Let's just look at this formation here. Market now is very short. Okay. Volume has been decreasing past days. And if you see this spike, you have a spike here to the downside. Market is back inside previous day range, and inside the spike, selling from half back here. I hope you have seen this. There was a nice opportunity to buy here. There's no very little risk here. If the market closes this distribution, that's it. The trade is bad. And what I want to highlight is how this spike was made. It was just so slow. It doesn't. If you remember this, I don't know. I don't remember when the previous spike was, but it almost was like that. But that's not. I want to tell you, if you remember that. But the ones before, how these spikes are made, and how this one in particular is being made. Now we have a new high again during the overnight. Both markets in Nasdaq as well. Look where this low is. Okay. hardback, right? It didn't close this distribution. You have multiple distributions. Very emotional day. This one, you got. As a matter of fact, let's highlight this. You have one distribution here, another one here, another one here. This is overnight low. If you do Nasdaq, right? Not even the upper distribution was closed during the overnight, during the spike. Now market is inside previous day range. Oh, I almost closed this by accident. I didn't mean to close. Market is inside previous day range. Balance guidelines apply. This weak reference in the upper side has been corrected. This one up here, no, has not. Held back. This one too. Let me call this over here. Right. Market's out of balance now. Both Nasdaq and the ES are out of balance. Inventory is short, settles up here. Most of the trade has been connected below. Inventory is very short. This reference here is still in place. I won't remove this until is corrected or taken during the regular trading hours. Significant higher volume here, very high volume. These options, the 5300, that are, oh, come on. That are way down here, okay? This one here. These were 10 points when the market was up here. Now, look at what's happened. It's still 10 points, right? Even though it has this big break. You know, it's very hard to do anything during these news events. Again, another all-time high. All-time high made in the overnight. Value, at least, I mean, it's too early to talk about value. But the weakest index right now is, I believe, is the Nasdaq. You know, it's because of that low that we talk because of that overnight low. But this one, you know, this is a sign who is buying, what kind of traders, what kind of participants are buying this market, right? By coming right to the tick This low has really low odds of being or high odds of being taken. Or at least the market come in and check some of these out, right? Same goes for the ES. This is a weak level from this day. Remember where all this movement came from? Exactly from half back here. That's why I have it here. Right? Now, this is adding weakness to that. Just let's check how this market, if there is something here. In the lower side, I have this area as a resistance or support or whatever. This is a particularly important area or level to me. This one, the 66, where a saddle is. Or we can call this whole area too. From here to here, that one. And again, come on, man. Another all-time high in the overnight. Are you coming? I mean, the thing is, did the market came back all the way up to here? Check this all-time high that was made in the overnight. Just to leave another one like that, just like that. The inventory, overnight inventory is short. There's some rebalancing going on now. My bad. It's not rebalancing. The market is trying to go, it's trying to follow the direction of the overnight trade. There's some. Oh, what happened with the number? That number, the non-farm payrolls probably was a good one. Let's check. Unemployment rate actual 4, forecast 3.9. Well, not bad actually. It was a good one. No, it was a bad one. I guess what I don't know. There's so many factors, so many numbers here to watch. Not just that. Let's check what else are here. Yeah, I have this. Non-farm payrolls. Look at these, man. The forecast was 150, but it added almost 300, like almost twice this. I think that's why we have that break. And actually, this is good. This is bad, but it's good for the market. This is bad. No, this is good, but it's bad for the market. It's the opposite right now. At least that's what's happening right now. Mix it. Next week, what do we have next week? We have CPI next week, Wednesday. We have FOMC Wednesday. I wonder what can happen there. PPI on Thursday and consumer sentiment on Friday. Interesting week. Next week. Lots back and forth around this. Yesterday's low. Here as well. Look at what's happening to Nvidia. I was checking this market. This is Tesla selling from what is this? The 100. And look at the highs and look at the lows. This can go in either direction. This one. Super. I think this has lost its charm. Money is coming from this market, I think, to this one. But it's just unbelievable. Look at what it's buying. Amazon buying from 100. Same thing going on in Microsoft. Hyperextended. Google. Apple as well. Apple's about to make. It can make new highs. Can it? Look at this. It's short coding in. This is really bad. This doesn't look. This is very risky here. Netflix. Alright. The fight continues around yesterday's low. Back and forth from that level. Now, the upper side. The first thing that I see in the upper side is this one. Now, if I want to check something, this is overnight distributions close, right? The first thing that the market needs to do, if there is something to the upside, is close this. Coming back inside this, can target this one here. The thing is coming back in here. Oh boy, look at this. Look at this. I just saw this one. This is the late pullback low. But there was change yesterday. What happened? Oh no, my bad. This is not from yesterday. This is from this day. And I decided to keep this one here because it just, what this did, it removed some of the laggard here. This pullback here wasn't good. It was good for the market because most of the trade, or pretty much all of this trade, happened above this. Well, there's some weakness here when the market takes this. There's some change, but there's potential of change here when this happened, right? And that's why I decided to keep it still, just to monitor. And now that area, this level, it's being used. You can see clearly here, right? What this is doing. What the market is doing. First it was buying from this area, and now it's selling from that area. Very short-term trading here. Very short-term trading going on here. The thing is, why it's important to me, or for me, to have an idea who is behind the trade. Because if the shorter the time frame traders, the lower the odds that these are going to keep their positions if the market moves against them. They are not here. Short terms are, as their name say, short terms. Are not here for the long term. They want to see quick gains. If the market moves against them, they are just going to give away their positions. Now, it has a promissory opening. Look at this, a really nice opening here. It's not going to be opening in here. Would be kind of like all the way up to here. But this seems like, let's see. This volume is not as good as I thought it was going to be. Okay. Now we have something. Look at where that high is. Right halfback. Right at yesterday's value area. The potential of a market that looks below or outside previous day range is that if it comes back inside, the potential destination is the opposite side of that of such a range. And bonds are not favoring anything. Here, bonds are really low. Bonds are really bad. Now, so far, all the trade is inside the spike. This, the distributions here, you can call this also a spike base, right? Let's call it spike base. I think that's more. You have a better. All the spike that we have. This upper spike has been rejected, but the market opened inside the lower spike, and inside. Many things. I have really bad days when I try to do something when the market has this kind of reaction. Right now, this high is really bad, both in Nasdaq and ES. And also, it's very critical, very close to this critical level here. Inventory is very short from the overnight. But remember this low here. The base of this, where this market has been bought, is super questionable. Same goes for Nasdaq. It just tells us. This is just to know, just to have an idea who is behind the trade here. Now in Nasdaq, there was a shake-off of the late longs here. This also is not from this day, it's from this day. This is the late pullback. Notice where it was yesterday. That pullback has been taken. So there's change in the market here. Same happened. Both markets are doing almost the same thing. Now there's penetration now. No, it's not penetration. It's yeah, some slight penetration value. Let's see, there's acceptance now. The weakest selling in the overnight, in the spike, the overnight spike happened in Nasdaq. Now because the last period, the night 9 a.m. basically closed the spike. But the market opened slightly inside the spike. Now, one thing, right? One thing happens today is that market has ended one time frame higher. There is cessation of one time frame higher today. Both the Nasdaq, the ES, the Dow as well. Just look at this. 1, 2, 3, 4, sober. 1, 2, 3, 4, sober. 1, 2, 3, 4 is over. All of them. Oh, look at Russell, right? All of this has been repaired now. Now selling is coming from the 100. Fields was buying, now selling. So I can pretty much remove these drawings now. Right? And oh. And I can move this one here now. Because now this is questionable. We have overlapping value, overlapping lower. One of the things that I observe when this happens is what the market does, right? The market tries to go higher, tries to keep going higher, and what happens to value? Is value being moved inside? If there is something to the upside here, value has to be at least inside yesterday's. Have to move at least inside. I think they are going to do this. I cannot see this better. This is better, right? Is it? Uh-oh. At least I can see that. What if I do this? It's interesting how, the center is blue, but just by doing this pink, now it looks pink. Just like markets, man. There's so much misleading information in markets. Okay, I'm going to go with that. Nah, I don't want to give too much prominence, you know. The relevance of that is not that important. I can see just like that's fine. All right. The base of the spike has been taken. We are inside, the market's inside value area. I don't know, I have no idea what's going on here. I just know for a fact that there's change in the market. If you have any questions, please let me know.
This is for you, Bobby. We show it to the camera. It looks kind of red, right? Red. It's red. Here you say. Okay. This is for you, Bobby. We show it to the camera. It looks kind of red, right? Red. It's red. Here you say. Okay. This is for you, Bobby.
Another interesting thing today is it is the end of the week. Okay. We have another volume here and another volume here. Can we see back and forth in this area? Still monitor on this. The next thing for the upside. The next thing tomorrow, look at where this high is. I'm going to put on that. Look at where this high is. Do you notice something here? What it is right there? Let's remove this one. Exactly half back here. Half back here. Look at this POC right here. Even though it's an elongated, even though it's a trending day, this is just, traders are just very visual. It just gives you an idea who is, who's your company? Who are we competing against here in this market? That's my alarm. That's a sign that I have to take some pills. So low is no good, high is no good, value is lower. Market is checking back inside yesterday's range. The same thing is happening in Nasdaq. Okay, we got this low overnight. I would say previous support here. High, POC, half back, call it whatever you want. Low, half back. Very technical markets today. And not dominated by short-term trading here. We have like a hybrid day today, kind of like a hybrid day. We have a trading day, the first half or second half, in the second part of the day was a rotation. We have some rotation out there. Just look at the shape of this. Some short covering here. Right? Short covering here. You know what short covering does to the market. And why I say short covering, because it is not the shape, not just the shape, but how it's made, right?
As for the remnants of that wild number that we had this morning with strong wages and better job growth, indeed, Treasury yields zoomed all right. But here's some context. 487 was the close in twos last week. We're still below that level, although we've come close to testing it. And when it comes to tens, they settled at 4.5 last week, 4.5. So we're still 7 basis points lower on the week. So when stocks seem to be dealing with this, what happened with the big drop in rates was mostly negated, but highly unchanged in many of the short maturities for the week. Sarah, back to you.
All right, good, great perspective. Thank you, Rick Santelli. Let's talk about this jobs report because it...
All right. I don't need to know anything else here. I don't know. Oh, you see, do you remember how this selling happened, right? The market was trying here. It just didn't happen. Then liquidation followed, and whole we have just after that this market was bought here, and short covering. You can see it, right? Market got too short too fast here, and then those shorts were forced to cover. Short coverings. Weak, short covering, weakness in market. Now we have a couple of weak levels in the upper side, but also around the same area where those weak levels are, we have settled, and this huge, man, this is really huge amount of blocks here. Not here, not yesterday. There was nothing yesterday, but here. This is about 10,000 here. Just before the end of the day, just before 5 p.m. If the market, and why I use these levels here, this is not for the immediate tell, but for example, if if there's a rally here, or if there's a break here, I will kind of like a hold or remain or have some kind of bias in this direction or in this direction until the market comes back to this area. Here. We may have a big rally, for example, and may come back here and goes through this. That's one change. There can be some acceleration from these areas, just like happened here, right? It happened right away here, like 2 days after this happened. It happened here, and once the market get here, we just you have a virulent short covering rally because the volume was really high here, right? Short was really high. I didn't know it was short. Just until this happened, I can say it's short. We never know. Right? This is something that you need to understand. People need to understand. We never know until after the fact. In the meantime, we just can speculate. This is history now. More important is the market has ended one time frame lower, one time frame higher. Good doses of upside continuation here. I have made a couple. I have bought this market a couple times in after the spike down here. Both markets have very specifically. You could have done both of them. Getting here. This is a mechanical trade because the odds or the risk reward is really high. Because what happened? Why you risk here? Once the market gets inside this distribution, it shouldn't take that much for the market to travel to the opposite side, right? The next thing, downside continuation, is coming here. If this closes or if this market comes back inside, look at how much is left here. For example, I'm going to put this one here. Only one tick. It needs only one tick, right? So your risk is one tick here. If you by any chance you got here, you got a position here, your risk is only one tick here. Because if it closes, that's out. That's the market changing there. It changes. It still has potential to go to the opposite side of this distribution. It didn't do that. All right. Same goes with Nasdaq. Very mechanical. This is higher risk here, right? The market did not close these distributions, right? It rather was bought from high back. But you have a distribution, you have empty single prints here. No problems coming through. No problem because there's nothing here. If the market comes back here, it closes, the potential is this. But it didn't even get to this level. But these are the things that we have to watch while the market is developing. What are you shorting the market down here is the question. Of course, in hindsight, oh, I am a genius. No, everybody is. I don't know who say this. I guess Napoleon says this. Everybody is. Everybody's are generals after the fight, right? Todos somos generales después de la batalla. Everybody are coaches after the game. Inside bar in Nasdaq. High is not good in Nasdaq. High is not good here. Boy, that bond market looks really bad.
This is for you, button. Wait, show it to the camera. It looks kind of red, right? Red.
Still have not seen a spike here. It's very hard for traders, to just to watch the market, to wait. The pullback, or the break that the bond markets are having is just very, very, very high. It's a very significant pullback there, and it's not being reflected here. These markets just don't care. But reality is bound to set anytime. All right, all right, all right. All right, all right. Nasdaq has is printing an inside bar here. High is very questionable though. This high is being corrected. It's having upside continuation. Oops. What the heck? All right. It seems. I mean, so far, this movement, the auction to the upside, is being successful, right? We have an auction to the upside. Monitoring for continuation had the first thing that we have was closing this distribution, taking the base, which is rejection of the spike. Next thing, right there we have pullback, we have POC. Now we have overnight POC. Next thing, settle, right? Which coincides with overnight high, and finally the all-time highs. Just check this out, right? Check this out. It's buying from the same place, right? From the same. This is what happened with Nasdaq. When this pulled back low, this the same. I mean, traders saw that happening and doing it again. When you trade, you must know your market. ES and Nasdaq are not traded the same way. You use the same system, learn to see the same principles. You need to observe the market, and that observation gets you to become familiar with the market you are trading, what kind of nuances your market has, and trade accordingly. The Dow is different, Nasdaq is different, Russell is different. You choose a stock, also those are different. Penny stocks, all those stocks, those doesn't count. You cannot trade that in the same way how you trade these things, because they don't have liquidity. Those are baby things. One participant can move the market significantly in both directions. Oh, talking about that, I guess there is some lots to talk. There's lots to talk about this GME, this meme stock again. Look at that, right? Look at I think that that guy, this kitty something, is sailing now. The only thing that he needed is for the stock to close above, I think about 29. Something like 29. Last week, there was a lot of talks telling that was a really bad move, right? Because he has only a couple days, less than a week for this stock to reach 25. And look at what he did, 29. Look at what he did. Right? It went all the way to almost 50, almost double his expiration. I mean his a strike. Now he's selling. Now it would be really stupid not to do it. But sell into what? Like who is buying that? That's the question. You need to understand that. He's not going to exercise. The odds that guy exercising those options are very low. That would put a gigantic, that's increasing the risk really high on whoever took the other side, and the market makers that took the other side, because that will kind of like force a gigantic short squeeze. But also the risk that he is taking, the risk that guy will be taking is really high as well. That would be a big bet there. That guy is not stupid. That's Bailey. That's kind of a really smart one. Back to a tale of two markets. Look at here. I'm going to put Nasdaq here. Just look at this market. Look at Nasdaq. We have good volume, not bad. What the market is doing? Okay, that's the question. What the market is doing? Is the market going higher or is the market going lower? Ask yourself that question. Write it down, right? And check after the market close. Check it, or maybe in 2-3 days. Come back and check what you have right. For once, the trend to the other. I'm going to give you some time to write it down. Just write it down, and then we talk about this. There's nothing wrong win with being wrong, right? But you need to have a position. You need to have an opinion. Following what other people says or does is not going to take you anywhere. You need to have your own. That's the beginning. All right. For once, for once the market is going lower now. Now, that movement to the downside has not been confirmed yet, right? Because we have market here, we have value here, we have this low. This low has been taken. Now the market is going lower. What can happen? We may form a range here. If this high is taken and this high is taken, I will look, that will give us an outside day, depending where the market closes. If it closes above this high, that would be an outside day, which is positive for the market because the market has explored and looked below the range, but closed it above, right? That's a shake off, maybe shaking off the weak longs that we have here. The nuance again against that movement is this all-time high that was made in the overnight. This would have been a really nice, good looking excess at the highs if this was made during regular trading hours. It wasn't. Right? That plays against that. Now we have these levels now, these weak areas here, very mechanical, systematic selling. Then the market is getting close to this. If these levels are taken with a spike, meaning that there's a change of tempo here, that could be something that there might be some opportunity here, because also the market is getting close. Coming back inside this range targets the opposite side of the range, which is the end of the trade. This is the ultimate destination of that movement, right? The same guidelines that we have here, same guidelines apply here. Inside bar, really nice inside bar in NASDAQ. Really nice inside bar in NASDAQ here. This pullback low has been taken. Now we just have this thing. We have an inside bar, another inside bar. I guess we have something similar yesterday, don't we? Or was here? Here. Look at these lows. Where I saw that? I remember something like this. Maybe it was the Dow. What's the Dow? Let's check that. Nope. Maybe the bond market? I don't know. I don't remember. Or maybe I am remembering another day. No, the Dow doesn't have that thing. Okay. The Dow looks like it can do some kind of range also. Just look at this. Wow, this range kind of like a sailings to the downside here, like T, 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 T. It may. Anything serious to the upside will keep this distribution open. Now, where this low is at, DLC, where this high is at, first the high was at halfback, now the low is at, this low is at PLC. All right. I can keep my eyes out of that bond market. Really nice inside bar. Nasdaq, look at those bars, man. That's a perfect balance. There can be something good coming out of that when the market gets out of balance. Pay attention what the market does when, if, or when it gets out of balance. Right? Watch for upside continuation or downside continuation, or let's rephrase this again. I take that. I will take that back. When or if the market gets out of balance, apply balance guidelines. You know, look for upside continuation, which would be going with the breakout of balance, and then the second thing is, you know, if the breakout fails, fade the breakout. Meaning, if there's a breakout to the upside or to the downside, watch if the market comes back, because you can target the opposite side. Whatever the breakout is, it's breaking out to the upside right now, right? It's inside this range, okay? If it fails, it hasn't make a breakout yet, right? Upside continuation has settled last POC, these weak levels, and the ultimate destination being the all-time highs. Failure will see the market coming back inside this range, and targeting the opposite side of such range. Very mechanical trade here going on. So there's no change in that regard. Everything remains the same. Okay, it is 10:25. $10:35, my bad, 10:35. Unless you have any questions, I'm going to be calling it a day. And I wish you guys a wonderful, wonderful rest of the day. Wish you happy trading. Stay safe. And have a wonderful weekend. Bye-bye.